Hey, everybody. It's your boy, Sean McLaughlin. Today is April 24, 2025. Hope you're doing well. Spring is well underway. I hope it is for you where you are. Um, it's been a week. It's been a week since we last spoke. I mean, boy, the weeks lately feel like years, as you know. The volatility in the markets has been all over the place, and even though VIX has come down dramatically from its highs, I mean, we're still seeing big moves in stocks and markets in both directions every day. And we've got earnings season on top of that. So, man, there's just a lot going on. So let's get into it. Before we bring up the charts, let me just drop the old disclaimer that everything we discuss here is for educational purposes only. Hope that you are learning something from following me or seeing my process and seeing how I think through things. All right. So let's talk about the S&P 500, the broader market. So it's a similar story for the NASDAQ, but we'll just use the SPY. That red circle we got highlighted here, we talked about this last week. That's the dreaded death cross, right, that happened early last week. Does it mean anything? Who knows? We'll only know in hindsight. But since we had that cross, which was what, April 14th, I mean, we had a few days dip down. We've come right back. I mean, we're right back to where we started. So who knows? But if we drill in here, I'm going to zoom in a little bit, and this is what's got my attention. This is what I've been talking about, and I've been talking about this for weeks. I've been waiting to see decisive follow through. I wanted to see a follow through day, a classic Investors Business Daily, William O'Neill follow through day, which is a day where we see the indexes gain, greater than 1% on increasing volume. And guess what, guys? We have a mixed signal here, but we got that right here on the 22nd, so on Tuesday. Okay, so as it stands right now, the intraday low for the market was on April 7th, but the closing low was April 8th. That's really, for me, the closing low is the most important low. So April 8th was the closing low for the market, where the S&P closed about 496.75, so below 500. Okay, so that's and then the next day we got a rally. We got a big rally, and this huge rally mostly came in the last hour of the day when Trump pumped the market, right? But that was day one of the rally. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Actually, let's go 9. On day 9, we got a follow-through day. But here's the thing. Look down here. I got the volume here at the bottom of my chart. You could see that this green bar right here, this was in fact, facts only, as JC likes to say, in fact, the highest, or it was a higher volume than the previous day. Okay, so we had a greater than 1% increase in the S&P 500. This was also true in NASDAQ, it was also true in the Dow, and we had increased volume. So technically speaking, that is a follow-through day. Now, when you look at that volume relative to, let's say, the 1, 2, 3, 4, 5, 6, 7 previous trading days, that volume is not all that impressive. And in fact, yesterday, when the stocks gapped higher, which is great, but it basically traded lower all day from the open. We gapped higher, but we closed near the lows of the day. All right. Yeah, we closed near the lows of the day, and we saw volume increasing in that type of situation. So, guys, the mixed signals are confusing here, right? We technically had a follow-through day, so that, if you believe William O'Neill, he'll tell you that no good bull market has ever started without a follow-through day that happens in day 3 to 12 following the low, right? But on such low volume, yeah, it was higher than the day before, but not really all that impressive in the grand scope of things. That to me is not a very convincing follow through. We might get a follow through day, today, maybe even, or later, tomorrow, or maybe early next week. If we get a increase in, if we get a 1% increase in indexes with dramatic volume, I mean, I want to see volume at least above this blue line. This is the moving average, the 20-day moving average of volume. I'd like to see it at least above that. If we get that, then I'll be a lot more convinced that this is a very durable bottom that's going to stick for some time. As it stands right now, I am willing to start putting on some bullish trades conservatively, and I'm going to be aggressive in taking profits. But I think until we get a real good, strong up volume day, I'm not convinced that this low is going to stick. So there you go. I don't know if I gave you any good advice there or good answer or whatever. It's just, this is the market we're in. I mean, let's zoom out just a second here. Look at this S&P 500 over the past, let's go back a year. Okay. So right about here, it's about a year ago. Look at this price action here in the last 3 weeks versus the rest of the year. This is wild, unhinged, completely lost trading. Nobody knows what's going on. Understandably so, right? I mean, we've got an administration that seems to be shooting from the hip without much of a plan. Maybe they do have a plan, but if they do, it hasn't been communicated to the market yet. And until that happens, we're going to continue seeing wild gyrations in both directions. So this is a tricky market, and that's the market we're in right now. But like I said, we did have a tepid follow-through day, so I'm willing to entertain some bullish ideas, and we will get into them. Now, as far as any portfolio action amongst All-Star Options trades, what we do here in the jam session is we like to review any action amongst trades that we have open, any exits, whether for a win or for a loss, any adjustments or anything else of note. So no particular order here. Let's just kind of go through the list. We had a trade exit at our profit target. This is the IBIT Bitcoin ETF. We had sold a bear put spread back on April 3rd. I'm sorry, a bull put spread, excuse me. This was a bullish bet, a conservatively bullish bet. Really, the bet we were making is that that it was not going to break down significantly from here, and we were going to take advantage of the volatility crush. Well, we got that. We took a little heat for a couple days, but we finally got stopped out at our profit target, or our limit order was hit, to be more accurate. We had sold the spread for $1.50. We bought it back for 75 cents. That's exactly where I wanted to take my profit, hit and run, and so far so good. So one win. Oh, hey, look at this. We have another win. An iron condor that we put in Broadcom, ticker AVGO. This iron condor we put on April 8th. We were able to, with volatility was extremely high in AVGO at that time, so we were able to sell strikes pretty far away from the market. We sold the 130 puts and the 195 calls. And then we protected at $5 away on either side. We collected $1.40 when we put that trade on. Well, just the other day, we were able to close it at 70 cents. Exactly the way we drew it up. Sell it for 140, buy it back for 70, keep the profits. So we're out of AVGO. Nice trade on that. Next up, the QQQs. We talked about this for the last couple of weeks. We had a campaign going on here. Not something I do very often, but you might remember that when we started this campaign on April 8th, was it April 8th? No, it was April 9th, on the day we had the big Trump pump. On that day, before the pump Trump, I went out there and said, look, I'm going to keep selling a daily spread. I'm going to sell a bear or a bull put spread, okay, which is a bullish trade. I'm going to sell a bull put spread every day from today until the day that the VIX comes back below 30. So that was my plan. Well, guess what? I got 4 days to do that. I was able to put 4 trades on. 2 of them hit profit targets pretty quickly. We talked about that last week. The other 2 finally exited yesterday. During yesterday morning's early ramp. I was able to get out of the other 2. In fact, I should have put little circles up there. Let's do that. Put a little circle here. There we go. Let's color it green. That's what we like. So we are out of the entire campaign. All right, so we did 4 spreads. On average, I sold each spread for around 82 cents. Some a little bit more, some a little bit less, but right around 82 cents. And each one, on average, I bought them back for 41 cents. Some a little bit more, some a little bit less. But basically, I sold each spread, or I bought each spread back for half of what I collected on the day that I put the trade on. So now we are completely out of the queues. We have no more trade on in the queues. That was a successful campaign. And why was it successful? It's not because I was wildly bullish. It was not because I was calling the bottom. It was because we had a confluence of 2 things. And really all we needed was was potentially just one of these things to work in our favor for us to make money, but we got both of them. We got the direction right, and we got the volatility crush. Now, we didn't have a volatility. Well, yeah, we had a volatility crush because this first spread we put on, the VIX was at 50, and the next two or three, VIX was still in the low 40s or high 30s when I put those on. So we benefited from the volatility crush. Once VIX came back below 30, the rest of the spreads were. So now we are out of QQQ, no more trades there. And then finally, this isn't so much a trade that happened in Take Two, but we had part of our spread expire away, which is exactly what I wanted. So Take Two Interactive got into this trade back on, I believe, February 19th or February 20th. We did a call diagonal spread. So this was a bullish bet. I was bullish Take Two, and I wanted to be long the August 250 calls. Okay. But when I put this trade on, turned out my hunch was correct, but my hunch was, yeah, I want to be positioned here because this is looking great, but there's a good chance that this stock is going to muck around for a little bit. It might take its time. So let me reduce my cost basis in these August 250 calls by selling the April 240s against them just to lower my cost basis. Okay. And the plan was, I wanted to let these April 240 calls expire worthless. Hopefully that was the ideal scenario. I wanted them to expire worthless, and that would leave me long the August 250 calls unfettered, potential for unlimited gains at this point. But now I'm an owner of those calls at a lower price than had I just bought them outright on February 19th. And it worked to a T, and boy, the market is rewarding us today. Our April 240 calls expired last week on Thursday. That was the last trading day for April options. So those have expired worthless. They're gone. Excuse me. All I have now is the August 250 calls. And boy, oh boy, we're getting some follow through today. We're finally breaking out of the range. I'm feeling real good about this position. So let's see what happens. We'll see what happens over the next week or so with the price action. Maybe we'll get an opportunity to raise our stop. My stop is currently at 192 for this position. But so far, so good in Take Two. All right. Usually what we do next is I update stops on positions that I currently have. But guess what? See my little column here? Nothing there. I'm not updating any of my stops. None of my positions are in a spot where it makes sense to raise or lower my stop, depending if it's a bullish or bearish trade. Big part of that is due to the wide ranges we've seen over the last few weeks. We need to see the markets kind of tighten up and get back to whatever the closest thing to normal is that we can get to. And once we see chart patterns start to tighten up and trends resume, then we'll have more opportunities to update some stops. But for now, I think for the first time ever since we've been doing the jam sessions, I think this is the first time we've never had a single updated stop. Hey, we're riding with what we got. All right, so next up, we'll talk about the two new trades that we've put on since we last spoke. We put on a bearish bet in Amazon that right now is not working, right? Looked like we may have sold the low here. We will see. But this trade, in fact, both of these trades, just this trade, this Amazon trade was more a earnings trade. Amazon announces earnings next week, end of next week on May 1st. I think that's Thursday, May 1st. After the market closes, they're going to announce earnings. And my feeling, at least when I put the trade on, my feeling is that with implied volatility very high in these options, we were getting a lot of premium to sell the at the money puts. Okay. Well, I bought a in the money puts, let's say put higher than the at the money strike. I think I sold the 170 puts and bought the 190 puts. Okay. And the bet that I'm making is coming out of earnings. If there is an earnings surprise, we are likely to see the surprise resolve itself in the direction of the underlying trend. And there's no denying that for the past 3 months or so, Amazon has been in a downtrend. And so if there is an earnings surprise, it's likely to resolve to the downside. All right. That's the bet I'm making. And even if Amazon just kind of comes back to this 170 area, it doesn't really do anything. And that's kind of where we are after earnings. Well, I'm short the 170 puts. they're going to collapse in value a lot faster because the premium is just going to come out of those things once the earnings unknown is out of the way. That puts me in a position to make some money. Now, right now where the spread is, I'm definitely not going to make money if Amazon is trading around these prices following earnings on May 1st. But we have May 2nd expiration options. So basically this trade is we're getting out the day after earnings. The bet I'm making is that Amazon's going to be lower or at least in the neighborhood of 170 following earnings. And as long as we're in the neighborhood of 170, we could be a little bit above it. We could be a little bit below it. But as long as we're in that neighborhood, this spread will make money. Obviously, if Amazon craters and goes lower, makes a new low, the spread will definitely make money. But that's a bearish bet we've got. And by the way, if you want all the details and all the nuance of that trade, it's all up on the blog. Head to allstarcharts.com, head to the members section, head to the options section. You will get all the details about that trade, the whole trade plan available to you there. Same thing with this KC trade, although this is a very different trade. This trade we put on yesterday, we'll put on a bullish bet here. Find the details on the blog, but the bullish bet that I'm making here in Kingsoft is that if this tepid follow through day actually is meaningful, and we have seen the lows in the market, at least a durable low for a little while, and we start to see some bullish follow through in the markets, we start to see breaking above the ranges it's been in for the last couple of weeks. I have a feeling that a stock like KC, Kingsoft Cloud Holdings Limited, a stock that had a powerful run in the back half of last year that basically just got sidetracked when the market fell apart, right? I don't think this sell-off in KC has anything to do with the stock itself or the company itself. I think this is just more a sympathy play with the markets. If the markets can heal themselves somewhat, there's a good chance that a stock like this can resume this flow that it had coming into the end of the year. And guys, this stock went from, let's say, $3 up to 23 almost. That's a 10x, almost a 10x return or 8x return, whatever, in what was it, 3 months? All we need this thing, I put a trade on that even if this thing just goes back to highs, which is a double from here, a little bit less than a double from here, we can be rewarded very handsomely. But so we got a bullish trade on in KC. This is one of those trades. I didn't risk a whole lot of money up front. But it's one of those trades that if the bull market is coming back, or at least a monster bear market bounce, either way, this is one of those stocks that could participate and maybe be one of the leaders going higher. So I'm bullish KC again. Get all the details on the blog. All right, folks, I don't have any stops to update you on, like I said. So if you have any questions about anything we covered here, shoot me an email at info@allstarcharts.com. That question will get routed to me. I'm happy to answer you. You could also hit me up on Twitter. I'm OptionsSean on Twitter. And I've got some links here. You can also find the links in the chat. So in the YouTube chat, I got, if you want to sign up for my free newsletter, that's the first link up there. Please hit it. I write just about every day, talking about things that are of note to options traders. Sometimes we dissect trades. Sometimes we do trade post-mortems. Sometimes we do something educational. Sometimes we highlight an interview I read or saw or listened to that was inspiring or insightful. All stuff that I think is relevant to options traders. So sign up for that free newsletter if you'd like. And if you're not involved in All-Star Options and getting the detailed trade plans and getting the trade alerts when they go out, you can head to stockmarkettv.com/get All-Star Options. That link is also in the YouTube chat. And lastly, if you like the charts that I share here, those are from trendspider.com. And if you click the link in the chat and use my promo code Sean50, you can get a 50% discount on subscription plans at TrendSpider. So check them out. All right, guys and girls, ladies and gentlemen, that's all I got for you today. Have a great rest of your week. Enjoy your weekend. We'll be back at it next week. Until then, take care and trade them well.